So yes, all in all, some cues that is we are up and gearing for today's trading session. Just 5 minutes to go before we hit the open at this point of time. But let's quickly get on board with our technical expert of the show who will make us understand how the markets are going to behave today. Joining me is Nilesh Jain, Head AVP Derivative and Technical Research of Centrum Broking. Nilesh, good morning. We have managed to hold that 25,500 mark for the past 2 days. What's the next that the traders should watch out for?
Good morning, Lavisha. So yes, you have rightly pointed out Nifty defended its important support of 25,500 that has acted as a psychological support, as well as if you look at the derivative data of the weekly FN expiring tomorrow, the data also suggests that the highest OI concentration on the put side is also placed at 25,500. Now that is likely to act as important support zone from here. It looks like we are likely to see Nifty defending those levels on expiry basis, and today looking at the GIFT Nifty and pre-opening session, which is indicating Nifty is likely to open somewhere around 25,600 level. Again, important level on the upside is 25,600, where yesterday as well Nifty faced immediate resistance near about those levels. So it is important for the Nifty to break 25,600 level for further upside to continue on the back of a short covering, which we believe seems to be likely on the card. And Nifty is likely to inch towards 25,700 to 25,800 from a very short term perspective. So buy and decline should be the strategy. Looking at the volatility index India VIX, which declined 2% yesterday. Overall, it has been forming a lower top and lower term formation, and a constant decline was seen, which is giving more comfort to the bulls. Currently, it is at a very much comfort zone for the bulls at 12.53 levels. Now, coming to Bank Nifty, where we are getting more confidence on the back of buying interest that got emerged in the index heavyweight, not only heavyweights, but also PSU banks, where we have seen a good spurt yesterday. So on the back of that, we are expecting Bank Nifty to outperform from here compared to the Nifty index, and on the upside 58,000 to 58,500 kind of levels can be seen in the Bank Nifty. So support is placed at 57,100. So that should be the stop loss, and buy and decline should be the strategy in the Bank Nifty as well.
Okay, buy and declines for Bank Nifty. Let's also talk about the broader end of the markets, because yesterday we did see some pressure which did emerge in the trading session. But Nilesh, can we expect some larger negativity to emerge going ahead?
I don't see any major negative sentiment in the broader markets, although yesterday we saw some bit of a profit taking. But good part was that after witnessing some bit of profit taking towards the closing hour, we have seen a sharp rebound in Nifty mid cap and Nifty small cap space. So that rebound has given some bit of respite and giving some bit of confidence as well. So we may see a follow-up move to continue in the broader markets. Nothing seems to be a bigger worry as of now. And if at all we see any meaningful correction, that should be used as a buying opportunity. The broader market structure is also looking positive. We have already seen a good momentum in last couple of trading sessions. In fact, last 6-7 consecutive sessions, we have seen a formation of higher highs and higher lows. So there could be possibility of some profit taking, but the undertone looks positive. The focus should be on the long side.
Okay, all right. Just a couple of seconds before we address the open. But PSU banks, that seems to be doing quite well. We'll watch out whether or not the Nifty PSU bank holds out the rally in today's trading session as well. Up about 5th straight day. We'll watch out if today is going to mark for the 7th trading session as well. But yes, the first trades coming on your screen, we have opened in the positive territory. 0.2% gains that is coming in for the Nifty 25,550 mark. That is where we are. We are trying to aim towards the 25,600 mark at this point of time. But yes, good open at this point of time, given despite the muted global cues and the mixed global cues that we saw overnight from the US markets and of course from the Asia Pacific markets. If you look at from the Sensex perspective, Sensex also doing well with about 100 points gain that is coming in. So a little bit of a muted moves, but however we are marginally higher in the higher terrain at this point of time. Let's take a look at some of the sectors at this point of time. Bank Nifty index seems to be doing well with about 0.1% gains, flat in the trade at this point. Nifty Auto Index also with about very mild gains. Other than that, FMCG index continuing its downward trajectory for the 4th straight session at this point of time, because it is opened largely and mildly in the red. If you look at the Nifty Realty Index, is also not doing well in today's trading session, with about 0.1% cut that is coming in. And Nifty Pharma Index also flat in the red at this point of time. India VIX seems to be at a cooling point with very mild in the red. And if you look at the mid cap and small cap indices, mid caps with about marginal set of gains and small caps also with marginal set of gains that is coming in. So the breadth of the market seems to be on the positive territory, but we'll watch out whether this sustains throughout too. But coming to some of the gainers and losers on the Nifty 50, let's take a look. Infosys seems to be doing well, 1.8% uptick that is coming in for Infosys. Other than that, we can see Hero MotoCorp doing well. We did see that the total sales had risen for the month of June. So that stock seems to be doing well. All in a larger perspective also, two-wheelers seem to be doing well, given that the June auto sales data seem to have fared better than what the PV makers did. Other than that, we can see ICICI Bank, TCS, Grasim particularly with about 0.7% gains that is coming in, and Wipro also seeing a gain of about 0.7%. So some of the IT names are dominating the charts of the Nifty 50. But however, on the way down, we can see IndusInd Bank with about 1.8% cut that is coming in. We did see that yesterday on the month, in last month, we did see the deadline of the CEO candidate for that RBI had to submit. So yes, the stock is not doing well with about 2% cut that is coming in. Asian Paints with about 2% cut, given the CCI has ordered a probe to investigate the matter of whether or not the company has been abusing its market dominant position to market dominant position. So that is what Asian Paints also not doing well. Trent, Bharat Electronics, one of the top gainers yesterday, given that all the defense pack was doing yesterday quite well. We can see a little bit of a profit booking in today's trading session. Bharat Electronics seeing a cut of about nearly 0.5% or so. And Maruti Suzuki also, like I was talking about, the PV maker seeing a pain in the month of June for the sales data. Maruti Suzuki also seems not to be doing well in today's trading session. But yes, coming to IT stocks, they have been faring well in today's trade. Infosys, TCS, Wipro seeing a good set of gains ahead of its Q1 results, which will be coming out next week itself. Nilesh, what are you watching out? Anything that you're liking from the large cap IT majors ahead of the first quarter results?
See, Lavisha, within IT pack, first of all, Nifty IT index is giving a good breakout today. Good momentum is expected to continue as far as Nifty IT index is concerned. 39,752, 39,900 kind of levels we are expecting on the upside, and support is placed at 39,000. So within this space, stocks like Infosys, that is looking attractive at current level, given the kind of up move that we have seen today. Good price and volume breakout we have seen recently in this particular counter. So we are expecting a follow-up move to continue towards 1655 to 1680 on the upside. Stop loss should be placed below 1605. So Infosys will be our preferred bet within the large cap space, followed by SCL Technology. This particular counter has been hovering above its 200-day long-term moving average. It is also trading well above its all long-term and short-term moving averages as well. So we are expecting a follow-up move to continue on the upside towards 1780 to 1800. And 1700 should be the stop loss in HCL Technology. And not only large cap, but also focus should be on mid cap and small cap IT names like Coforge, Birlasoft, LTIM. In fact, all these stocks are also witnessing a bit of momentum that we have already seen yesterday and today as well. So Birlasoft is also looking positive for 455 to 460 levels on the upside. Stop loss can be placed below 430.
Okay, all right. Let's address some of the auto stocks also at this point of time. Let's see how Hyundai Motor, we did see that yesterday they saw a 6% Y-on-Y drop in total June sales, and even Maruti posted a 6% drop on a year-on-year basis in the June total sales. Hyundai Motor seems to be not doing well with about 0.7% cut that is coming in today's trade, and Maruti Suzuki also with about 0.2% cut. But yes, how do you view both of these counters, Nilesh? So far this year, if you look at and from the last month perspective, Hyundai has still outperformed Maruti in terms of stock performance.
Absolutely, Lavisha. So post listing, we saw some bit of consolidation that has extended for a couple of months. But now, recently in the month of June, we have seen the momentum has picked up, and the stock is making a hat up and a bottom formation as well. So a good momentum seen for on month basis for the past 2 consecutive months in this particular stock. The structure is still looking strong. And although we have a limited data, but whatever data is available is indicating that counter is likely to move towards 2,400 to 2,600 levels from a short-term perspective. It has a very strong support at 2,150 levels. So some bit of profit taking may extend. from here towards 2200 to 2180, but that can be used as a buying opportunity, keeping a stop loss below 2100. So Hyundai looks positive. Maruti, on the other hand, we are expecting this consolidation to continue because the stock is stuck in a very tight range. 12,100 is acting as a very strong support, and 13,000 is acting as a kind of a barrier for this particular stock. So that's the broader range. We expect this counter to oscillate and move sideways.
Okay, all right. Let's also address one of the top losers on the Nifty 50. That was your Asian Paints, given that CCI has ordered an anti-competitive behavior on the company. We did see that CLSA has come out with its underperformed rating on Asian Paints and have given out a target price of 1966 per share. CLSA has also said that this development highlights and heightens these regulatory scrutiny on how established players respond to the new entrants. So yes, that is coming in from CLSA on Asian Paints. And if you look at from June lows, the stock has done quite well. If you look at the chart, it is seeing a good structural uptrend at this point of time. But yes, on the CCI probe, Nilesh, what is your view on the counter on Asian Paints?
See, Lovisha, we did see some bit of recovery from the lower levels, but the major structure is still a bit of a worry because we are not witnessing a convictional or a decisive breakout in this particular counter. It is still trading well below its long-term 200 exponential moving average, which is currently placed at 2460 levels. So I would rather wait for that breakout and post, then we can buy. But as of now, it looks like more sort of a sideways, no clear trend as of now. So better to avoid for the time being till the time we don't get any clarity. But if somebody is already holding the long position, can keep a trailing stop loss at 2260 and stay put, hoping that the stock will eventually break out above its 200 exponential moving average going forward. But as of now, it's an avoid.
Okay, as of now, it is a void. Let's take some viewer queries that is dropping on our live feed. They're waiting in anticipation. The first viewer query that is coming in from Reddit is asking that, from Nitin Shaji, is asking the view on Suzlon at this point of time. Suzlon, how do you view on the charts? If you look at from a 1 month perspective, the stock hasn't done well. 5.8% downtick for the counter. Anything that you're watching out for, Nilesh?
See, it is making an attempt to cross 6970. That's the hurdle for this particular counter. Overall, the structure looks positive from a short-term perspective. We are expecting a move towards 72 to 74 on the upside. Since it is trading near its support level, so risk and reward is looking favorable. 60 to 63 is the support, so that should be the stop loss for the long position. And if already bought it, then stay put, keeping a stop loss near about those levels. A gradual recovery we can expect in this particular stock towards 72 to 74. And just in case if it breaks 74 levels, then the next target would be somewhere around 82 to 85. So bigger target can be seen only if it breaks 74 levels decisively.
Okay, all right. 74 levels, that is what we need to watch out for Suzlon Energy. Let's move on to another viewer query. Debuk is asking the view on HCL Tech and Persistent Systems. If you compare both of the stock performance from a 1 month perspective, Persistent has definitely outperformed HCL Tech. But going ahead, what is your view on the counter, Nilesh?
See, no doubt, Persistent is still looking better than the other stocks. So overall, structure-wise, looks like it is heading towards 6400 to 6500. So positional target comes around 6400 to 6500. Keep a little positional view in this particular stock. Keep a stop loss below 5900. Stay put. The structure looks positive. As I mentioned, the mid cap and small cap ITs are looking better than the large cap stocks like HCL Tech, TCS, Infosys. So better to focus on mid cap and small cap ITs, but also HCL Technology is also in our recommendation list. We are expecting a gradual up move to continue towards 1750 to 1800. This is another good stock, but you have to give some more time in this particular counter. So if you can hold it for next 1 to 2 months, then it's a good bet to stay put, keeping a stop loss below 1680. 1680 is a very strong support. That should be the stop loss.
Okay, that is the view on HCL Tech and Persistent Systems. Let's move on to another viewer query. Rupak Mohdaya is asking, please advise on BLS International because he's seeing, he's still down about by 7%. He's asking whether he should hold on to the stock or should he exit at this point of time. BLS International, what is your view on the counter, Nilesh? So far this year, the stock has been an underperformer.
Right, it has been one of the underperformer. We have seen a continuation of a lower top and lower bottom formation. Stock made a high near about 520 in the month of January 25, and since last 6 months we have seen a lot of consolidation with negative bias. Still the structure is looking weak, so strategy should be sell on rally. If at all you see any pullback towards 380 to 385, that can be a good exit level. And if you want to stay put, then keep a trailing stop loss at 355 and wait for a pullback, but it is exit on a pullback only. So structure is looking weak.
Structurally looking weak at this point of time. Let's move on to another viewer query. Alex is asking the view on JSW Energy and is asking what is the major resistance to watch out for. We did see yesterday that the subsidiary of the company, JSW Renew Energy, has signed a battery energy storage purchase agreement with Rajasthan Rajya Vidyut Utpadam Nigam to establish a 250 megawatt battery energy storage system. If you look at from June lows, the stock has done quite well, up 9%. But what is the next level that we need to watch out for, Nilesh?
So Lavisha, this particular counter has been fairly doing well. We have seen good momentum from the lower levels, and if you ask me, like positionally, the stock looks more attractive given the kind of a risk reward at present. Although the immediate hurdle and resistance placed at 545, if it breaks 545, then the next target would be somewhere around 600 to 640, or maybe we can expect a counter to move towards 700 as well. But looking at the overall setup, we are expecting accumulation is happening this particular stock, and positionally we are a little bullish for this particular counter towards 650 to 700. So if somebody can give some more time, like positionally we are very much bullish. Short term some consolidation can continue, but keep a stop loss at 500, stay put, and if somebody can hold for 2 to 3 months, we can expect 600 to 650 as well.
Okay, all right, 600 to 650 as well. Let's address one particular stock, that is your VMart Retail, because it did come out with its Q1 FY25 update. It has posted about 12.6% year-on-year increase in revenue, supported by the same store sales growth and 15 new store launches. Now the total store count stands at 510 across India. But if you look at so far this year, the stock hasn't fared well, but Q1 still better. Can we expect good up move going ahead, Nilesh, because the stock is doing well today?
Yes, stock is doing good today. We are witnessing a pullback, but I would still wait for a decisive move beyond 900, because the stock has immediate hurdle at 900 levels. That's the 50-day moving average resistance for this particular stock. Good part is that it is trading well above its 200-day exponential moving average that is placed at 850. So it is important for the stock to cross 900 on the upside. Then probably we can expect a move towards 950 to 970. And if somebody is already holding the long position, can keep a trailing stop loss at 845 and stay put. But for fresh entry, wait for a breakout above 900, then it can be bought for further up move towards 950 to 970.
Okay. Let's move on to another viewer query. Anune is asking the view on PG Electropras. He's bought the stock at 844. He's seeing a bit of the loss at this point of time. So he's asking whether he should book losses at the current juncture. What would you suggest, Nilesh? Underperformer once again this year.
Right, we are also witnessing some bit of structural breakdown, although it is trading and hovering near those important support level of 725. If it breaks below 725, then it's a kind of a sell on right structure for this particular stock. Then probably one should exit. So keep a stop loss at 725 first of all, and then if at all you see any pullback towards 780 to 800, use that pullback to exit from this particular stock, because the short to medium term structure is hinting that we may see further downtick to continue. So better to keep a stick stop loss at 725 and exit on pullbacks.
Okay, exit on pullbacks. Let's move on to another viewer query. At this point in time, Advait is asking the view on RBL Bank. RBL Bank, quite a good performer given from the past 6 months as well and from the past 1 month as well. 22% returns that is coming for RBL Bank. Can we expect more upside going ahead, Nilesh?
Right, Lavisha. So if you have observed in last few trading session, we have seen mid and small size bank like RBL, IDFC First, CUB, these stocks, even Federal Bank, these stocks have given a good momentum. So structure wise, RBL Bank is looking positive. We are expecting a pullback move to continue towards 275 to 280. If already bought it, then keep a trailing stop loss at 245 and stay put. We can expect a gradual up move to continue towards 275 to 280. So looks good on the chart. Apart from that, Federal Bank, IDFC First, CUB are the other stocks that are also looking positive.
Okay, all right. Let's move on to another viewer query. Mukul Vaidya is asking on Abbott India. He's asking from a long-term perspective. We did see the stock has seen a good breakout in the month of June itself. But what do you expect? How does the chart indicate for the near term, Nilesh, for Abbott?
So if you pull up last 10-year chart, you can see the counter has been trading in a secular uptrend. The structure is looking very strong. It's a good MNC stock. The idea is to buy and hold for a longer term perspective because the stock has a potential to cross 40,000 mark as well. Currently, it is trading somewhere around 34,800. So keeping a stop loss below 32,000, one can ride this rally up to 38,000 to 40,000. And the structure, the undertone looks strong. Buy and decline should be the strategy. The ideal strategy should be buy in a staggered manner. It's a good portfolio stock.
Okay, good portfolio stock. Let's move on to another viewer query. Paddy is asking whether he should invest in Karnataka Bank. We're seeing a little bit of a decline in the counter, given that we're seeing top management exits from the lender also. But what would you suggest? Should you accumulate at this decline, Nilesh, Karnataka Bank?
See, we did see sort of a pullback and a breakout from the levels of 205, but that was a false breakout. The momentum got fizzled out. And looking at the recent momentum, we have seen a gap down opening with a good volume attraction. So it seems like we are witnessing a lot of unwinding of the long position in this particular counter. So we may see a follow-up more on the lower side to continue. So it's an avoid for the time being. Avoid taking any contra bet. We are expecting this consolidation to continue with a slightly negative bias. 190 is important support. If it breaks 190, then target on the lower side could be somewhere around 185 to 180. So keep a strict stop loss if somebody has already bought it and it's an exit on pullback. You have better option available within the banking space that we have just highlighted. So probably one can switch to these stocks.
Okay, all right. All right, just one last question before we let you go, Nilesh. Anything that you're watching out for? We are heading towards the Q1 results season, but anything would you highlight as top buying picks?
Right. So defensives are once again back into the action. We are witnessing a sector rotation. So IT and pharma are looking positive. Few selective autos as well. So within IT space, specifically as mentioned, that mid cap and small cap ITs are looking positive. Coforge is our preferred bet within the mid cap and small cap IT pack. So Coforge looks positive for 1980 to 2020 kind of levels on the upside with the stop loss below 1910. Coforge can be bought. Apart from that, within a pharma basket, Divi's Lab is something that is looking positive on the chart. We have seen a good breakout yesterday. Today we are getting a follow-up move. So Divi's Lab can be bought for upside target of 6950 to 7000. Keep a stop loss below 6750. Yes, it can be added on declines as well.
Okay, all right. Those are the stocks that we need to watch out for. But with that, we have to let you go, Nilesh. Thank you so much for your time, and we hope that we connect with you soon.
Thank you, Lavisha.
All right. All right, let's quickly check the markets, how the markets have been behaving before we move on to our next guest of the show.